Welcome to another episode of Banking Hours, a series co-produced with Backbase. Today I'm joined by Khairil, who is the CEO of Bank Simpanan Nasional, and Sumit, who is the Head of Solutions Engineering at Backbase, a banking engagement platform. Now, a bit of history about Bank Simpanan Nasional. Bank Simpanan was founded in 1974 to take over the role of the Post Office Savings Bank, which was made possible by the enactment of the Bank Simpanan Act of 1974. Now, much of the bank's history is rooted in financial inclusion, a lot of its original goals being to promote savings among the Malaysian population. And of course, I remember just about a decade ago, one of the famous rollouts that you guys had was the Asian banking, which I thought was impressive, right? Because it's something that was quite popular in the Pacific Islands, quite popular in Latin America, and it's shown a lot of success over there. And you guys have replicated similar financial inclusion activities in Malaysia as well. Now, Jay, you've recently been promoted to Chief Executive 2 years from your Chief Internal Auditor role.
Exactly 2 years ago. Yeah.
How has that transition been? Because I would imagine it's quite the jump, right? From internal audit to like taking care of the entire bank. How's that progress?
So it was initially internal audit, you were right. So I was a career auditor. And within the bank, I was then promoted to the CFO role. So I was a CFO for close to 2 years before I was then given the opportunity to helm the current role. So yeah, I've been the CEO now for 2 years. How has the transition been? I always joke with my colleagues that I would rather be in my previous capacity. Less headache, less nuances. I don't have to worry about, now I also tell my colleagues, the slightest thing, the roof bocho, it's also my responsibility. So it's all encompassing. It's a very enriching journey so far. But the transition, it facilitates, being an auditor or being a career auditor, especially in banks, and after a while, you tend to get a lot more entrenched into operational issues, right? So, especially if you carry yourself as a value-adding auditor, you would want to naturally see how you could contribute to the bank or to the organization. What are the areas that you think could be re-engineered? What are the things that you think could probably be done better? In some instances. So it is premised on that background that operationally, it gives you that ability to capture, and appreciate control environment, for example, much better. Then, of course, to the CFO position, whether you like it or not, the balance sheet, the P&L, the financial sustainability of the bank it's your responsibility, right? Yeah. And also, CFO today are very different from the CFO in the past.
Yeah.
You are very tuned into the strategies of the bank. What are the things that you need to do to make sure, not just from a financial standpoint, but also a lot to do with all the strategies and also the corporate actions, etc. in the bank. So it's very enriching, and before I could really warm my seat as a CFO, I was then given the opportunity to, of course, be in my current capacity. So it's been a very exciting journey so far. So today, just to share a little bit of initiatives, like, we, from an inclusion perspective, you also mentioned about us being a great anchor from an inclusion space. So we have this segment of microfinancing, which is a very important segment to us because they are most notably not served.
Yeah.
Right?
True.
Even when they feel the need to be served, sometimes the reach out is not there. And that's where, as an institution mandated by the government, DFI, that promotes predominantly financial inclusion, that's a segment that we want to do well. So it is also no-brainer to all the commercial banks, my peers in the industry, that don't go near that. But this is
because it's not profitable for them, and they don't have a mandate to do it like
high
you guys.
NPLs, etc. So now the trick of doing microfinance is how do you crack the code, right? I'm not sure if I've cracked the code or we have cracked the code.
Well, we'd like to hear it.
Yeah. But we realize that we need to work with partners, solution partners,
For sure.
fintechs,
For sure.
ecosystem, marketplace.
Sure.
So today, discussion around the management table are all those conversations. So you imagine just a couple of years back, this could not have been a possibility if the mindset shift did not happen.
For sure.
So because of that, that we have worked in that multi-pronged basis. So we are talking to partners, we are talking to fintechs today, and this is how I think the journey would be for us going forward. Now, then the question is, how does this fintech solve your problem in terms of cracking the code? To begin with, they have fantastic analytical tools, right? We hear often about a bank today is a data management house, right? It's a data warehouse. Banks are moving that direction.
It's still storing money and storing data as well.
It's data, right? It's a data work. So how do we do it? They have the technology capabilities so much more agile than us, right? For me to do something, I have to build it, organically. I have to go and see my data center capability. I have to work around my security. I have to work around, my RMIT compliances.
It's a laundry list of things as well.
There are so many things.
Yeah.
But these guys, they ask you, what do you need? Oh, I need this, this, and this. Okay, it's done. Give me a week, I'll come up with a prototype. Right? All we need to do is we integrate the API, do some testing, make sure you are secured from an RMIT perspective, and we are from our own space, and that's how we work. Look, it would be, of course, the commercial terms are going to be different. Why even bother thinking that you can earn all by yourself, right? Let's share the love, right? Share the love. But this is how I think we can evolve by not having the technology in it, but remain at the forefront of championing the mandate, right? So, another case in point is I have even convinced, okay, I'm not sure if I can say this, but I've even convinced MOF recently in the budget that we should also digitize the penjaja, right? So, and sure enough, it was announced there will be a total allocation of 10 million for us to work around digitizing penjajas. These are
it's even smaller than mom and pops, right? Because
this is like the hawker stalls you see on the road.
Yeah.
So,
solo entrepreneurs.
Yeah. So in Bahasa, it's called penjaja.
Yeah.
But these are the ones that you go in your pasar malam and you see them selling kuih, you see them selling all this. So how do we digitize them? Again, how do they one day become, say, even to get to the micro segment or even to the SME segment, right? If they do not have the capacity and the capabilities.
Basic accounting stuff.
Dashboard.
Yeah.
You ask them, what is your sales volume in a month?
Yeah.
What are you talking about, right? How do you pay your suppliers? How do you buy your things?
And they can't get loans if they can't even provide this kind of simple data to the bank.
Exactly right. So that articulation is not there. So when we work with fintech, when we bring them on board the ecosystem, they then know, of course, how do I give you a 50,000 loan, for example? First thing first, you need to complete module 1, 2, and 3.
Right.
Simple, basic business management, cash flow management. Don't worry about accounting. Accounting in the future is just a press of a button, right? Your financial statement will be there or whatever you want. Now, with all this appreciation, they then, without them realizing, would have a very good understanding of their business, right? The activity of their money flow.
Sure.
Right? And now they suddenly are appealing to banks. hey, I may not have your traditional financial statement, I may not have your traditional audited reports, but I have all this data, right? Which I could not have had if I do not have this platform. So this is how we are making them coming, or make them come around this ecosystem. And I think, I'm not sure yet if I have cracked the code, but I think this is the way to go.
A part of the code at least.
Yeah.
And I think there are some important points that you've brought up, right? So, when it comes to the transformation journey, and I think Sumit can probably attest to this as well, it's not just legacy system, but legacy in terms of people as well, legacy mindsets, a lot of shifts need to be done.
Yeah.
And, the whole digitization of this micro and solo entrepreneurs, I think another good point is it's not just about enabling QR payments, right? Enabling payments is a very small part of very small part of it. So this kind of additional activities can be very helpful. Speaking of financial inclusion, I think Bank Negara has a very big focus this year as the 2010 to 2020 financial inclusion plan has concluded, and now they have the 2023 to 2026. I may have mixed up the years, but they have a new entire framework coming out.
It's in the blueprint.
It's in the blueprint, exactly. And then they've come up with the digital banking framework to also focus on financial inclusion as well.
Yeah, exactly right.
I'll direct this question to you, and then maybe we can hear some regional examples from Sumit.
Sure.
I think if we look at markets like Singapore, markets like Hong Kong, where they launched the digital banks, the first thing the analysts will say, the S&Ps of the world, they will say the mid-sized banks are probably a little bit at risk here, especially those who serve this segment. And your entire reason of existence is to serve the underserved, right? So how do you feel about 5 new players coming in, targeting exactly this space? Do you see them as potential competitors? How do you plan to stay ahead of the game with these folks?
Well, the answer is yes and no. They will eventually be a competitor, right? As they mature in their business model, as they fine-tune, from operational resiliency perspective, they will eventually be competitors to all the banks, not just us. But now, if the segment is about underserved, we need to also carefully peel the onion on what does underserved means, right? Underserved could be a young graduate who is financially probably educated in some sense, right? Or to a person in a far remote area, right, who may not have access to banking.
Very different demographics.
So it's so diverse in terms of the profile and the demography.
Different needs completely.
But this person who has just graduated would probably have a very up-to-date smartphone, as opposed to that person who may not even have a smartphone.
Maybe still on a Nokia 3310.
You never know, right? So the infrastructure landscape is also very diverse. Now, where do we serve? While we want to capture the young generation, like how I've explained, we have to, because we have onboarded them since they're at school, and when they graduate from school, we want to keep them. We want to be right there. Now, that's one segment that we shouldn't neglect. Now, it is also our mandate from an inclusion perspective to not also neglect those people without their smartphones, right? So that to us is underserved. That to us sometimes could be unserved. And that's where we have to draw, not just from, inclusion is such a big word also, but we also have to know what do we need to do. So then it includes a lot of financial education and literacy. So the literacy part is where, as simple as a guy who cannot not go to a bank branch in a day, right? But this is where I think we are slightly different, and we have to understand the demography to serve better, right? So while we want to do all this sexy stuff, digitizing stuff, digital channels, and all those things, the agenda for inclusion must never neglect those people. And that must include providing enough education and the literacy.
That's the northern stuff.
Yes. Yeah. And then we migrate. And as we move as a bank towards digital advancement, digital transformation, we have to bring these customers of ours together. And today we are still discussing on physical mobile bank branches. So these are vans that are customized, that we could actually fit an ATM machine into it, and we drive them to the most remote area in town, and there will be lines of people trying to use the facilities that we provide through a van.
It's a very different definition of a mobile bank.
Exactly, right. So this mobile bank literally move.
It's literally mobile.
Literally move to a destination or a location, park there, and serve lines of customers. And you know, it's so community-like that you won't believe it. The municipal council will say, we also didn't know that there is such a line. Don't worry, tomorrow we will put a tent. Free of charge. Don't worry, you don't even have to apply. We will provide tent, we will provide chairs so that they could wait comfortably, attending to a mobile unit or a van. So this is how financial inclusion
There's
is.
such fascinating stories on the ground.
To be a set. And which is why in our 5-year, we've crafted our 5-year corporate strategic plan, 2022 to 2026, which is very purpose focused in doing what we need to do. Inclusion agenda is key. It's our key aspiration.
Yeah, of course.
Right? Advancing in financial inclusion. So these are things that we do to make sure no Malaysian left behind. That's our vision, by the way. So no Malaysian left behind are entrenched in us. Our people understand the meaning of financial inclusion, who is unserved, who is underserved, and how do we capture this market in a much more profound manner.
A lot of key points there. I think that before we jump to Sumit, I think like a few things that we don't often think about is that underserved is such a big word.
Yes.
Right? So you raised a very good point, like the student in KL is very different from the folks in maybe some remote areas of Sarawak or Kedah. So very different needs, and I think the digital banks that come up probably won't be able to serve one or the other segment.
Yeah.
Right. So very different purpose, very different mandates, and I guess each will still have its own reason to exist within this financial ecosystem. Now, Sumit, from your observation in other markets in this region, right? Because there are a lot of digital banks being launched in other parts of Asia as well. How are the mid-sized banks keeping up with this launch of digibanks?
Thanks for the question. You asked very politely. The other interview I attended, these guys asked me, is traditional banks dying? So, to be fair, right? So, if I start from, this Malaysia context and then go to other, it will add value. So, if you look here, the focus segment is referred. So, there is going to be, let's say, a little more crowding on the supply side. While not everybody may be able to serve everything, like for example, BSN's their experience, that they have carried, they understand. Other guys will have to, get to that point. Sincerely, I hope, that they succeed because end of it, customer is the real winner here rather than, one party wins or the other, bank wins. But then they will have to survive. So it's a different battle. But given that, there is going to be more crowding on the supply side, there is going to be more intensity, which breeds innovation. So in that case, there is always some displacement. So whether it is a real displacement, you take, somebody's share, getting taken away something, or it could be notional because you could have gained that customer. So, but I, concur with the G's viewpoint as well. It's, there are a lot of areas where you could innovate here in this. Micro entrepreneur propositions are going to see innovation here, and similarly, if you see, digital lending would be another one. Specifically, if you see 2010 to 2020, a lot of areas progressed. Retail payments, accounts, but credit never really up to, for a lot of reasons, which we all can understand. SME 39% to 45%, still 55%, not having access. Same is the case with the retailers. Fair. So I was reading the paper and clearly mentions that 47% of the people are not confident that they can raise even 1,000 ringgit as an emergency fund. So there is a wide gap.
Yeah.
So now, whichever way it turns up, it is going to be good for the customer. Now, relating to this is a similar story. So Philippines, 70% underserved and unserved.
But they have made marked improvement in the Philippines in terms of the numbers. Yeah.
There is improvement everywhere, but ASEAN, for example, is similar, right? 60% is still in the same boat. Now, does it pose an immediate threat? So probably I would, again, there is some displacement, but it is not a threat. Now, but it also does not mean that doing nothing is an option. So
it's an option. It's not a very good option.
It's not a very good option. So like you said, mid-sized banks, they already start having excitement, at the time somebody says there is a license coming. So here as well, 1 year back, already there was excitement, digital initiatives started. Same is the other players as well. So they have innovated in all different ways. So for example, one of the banks in Philippines, they are launching a specific proposition only for gig economy.
Oh,
very, very different, because it's not one size fits all. The SME proposition is different from MSME to others. There is another bank, which I know is trying to go to a challenger mindset, like Jay mentioned, that it starts with the culture, and the burden that the traditional bank carries is some legacy tech plus then the mindset and inertia, because so it takes time to change it. So they are changing their internal processes, which is a big thing, and also investing in tech to do a lending in real time. When I say real time, it's approval in real time, disbursement maybe in a day or instantaneous, depending upon the type of thing. There's another one which is a curious case in insurance, where they're going with micro premiums.
Sorry,
micro premiums.
Right.
If I'm a worker working for 3 hours, then accidental coverage, I need to pay premium only for 3 hours.
Yeah.
Now, where is the difference, to be fair? You compare neobanks and traditional banks. So traditional banks have been, have the strength that they have the trust. That is their strength. And, in that case, but they also get the baggage that they can't change immediately enough. You can't change overnight. It takes time. Neobanks, on the other hand, fresh start. In that case, they, nimble in nature, they can do innovation faster, but they also bring in an additional dimension on the customer side, which is convenience. So those banks, in examples that I gave, probably what they've done is they have married this trust, which is high touch, like, agents to other, with little bit high tech to innovate. So you combine, you grow, because you already have the strength, but can you invest more in digital initiatives, be curious enough to innovate same products, but in a different way, like you see, lending from 10 days, months to 24 hours. Same
and that's
products.
a huge difference.
But delivery, internal alignment, mindset, process, credit, because data is not as good as urban side, you will say, or upper segment. So you would have adjusted to that. So there are different models in which they have tried to do it, and it's I would say it is good for everyone, because digital initiatives in all sides are rising and makes the country and the market progress.
And of course, I think every market is very unique, and every market is very different. And to Malaysia's credit, we've actually done a fantastic job on the consumer front. And I think what Bank Negara has mentioned is that we've got 96% financial inclusion.
Oh, yes.
And now the big part of the 2023 to the 2026, 27, correct me if I'm wrong.
Yeah, 26.
Yeah, so the big part is they call it the last frontier, right? The last 4%. What role can digital technologies play in capturing that last 4%? Or is it a problem where the answer is not digital technologies, this last 4%? What do you gentlemen think about that?
Let me just also recap some of the stats.
Sure.
This is data, right? You're right. 96% of adults have accounts today.
Yeah.
As opposed to 87% in 2011.
And it's a big.
Right. So that's a huge
decade.
divide, and it's caught up.
Yeah.
Because I think Bank Negara has done a fantastic job in promoting financial inclusion, the entire ecosystem. So banks have now come about to do meaningful, impactful initiatives to bring about literacy and also education. Now, the other ones is 99% of the mukims, these are the smaller districts, 99% are served. So you are either present technologically or you're present by brick and mortar. But the point here is you are present, and so they have physical access. 95% of sub-districts have presence of FI, right? So either through agent banks or branches. So this is another important step. Again, it's 46% in 2011. So imagine the shift, right? So from 2011 to now, probably about 10, 11 years, 12 years, the shift has doubled up, right? So it's almost 100% now. Of course, 45% micro share of business financing to SME. 42% of adults have at least one family takaful, as opposed to 33%. This is an area, I think, Bank Negara, of course, even the government realized that there are some intervention probably, right? So we started, during the pandemic time, the government introduced this thing called PTV, or Pelindungan Tenang Voucher. This is a voucher to the more deserving ones, for them to use that to have protection, right? Now, one amazing thing that came out from that is, yes, at that time, the awareness of people needing protection was imminent, right? Was so high that you could virtually sell any protection product and people would buy it, but it has to be affordable. So it was also timely. Okay, I'll do some marketing later, but
obligatory, I suppose.
I want to share the facts first, right? But it was good, whether knowingly or unknowingly. At that time, when we launched the PTV, or the Pelindungan Tenang Voucher, not only that it increases the awareness, but it brings about the traction, right? So today, all we need to do is, remember this so-and-so during the pandemic did not have this protection. This is what happened. Today, this person has protection, and it sells naturally. And, suddenly you realize the uptick in terms of coverage, whether it's takaful or life insurance, suddenly has this momentum, right? Just of the intervention, just because of the intervention, which I think is a fantastic thing that the government has done, and also Bank Negara in particular. So the promoting, the push for insurtech or insurance companies or takaful to be a bit more innovative and creative in coming up with products that suit the lifestyle of this demography. And I think that is what has come out from this space. And of course, a bit of marketing. We have a very hot selling product called Takaful Sakina, and it's low premium, like what you just mentioned, but it caters to the needs of these people. So this is 50 ringgit premium for a year.
That's very affordable.
Very affordable. Of course, it doesn't give you fantastic coverage. It doesn't have to. All it does is bring about awareness. And as you progress in life, as you have better income, for example, better affordability, you could then invest in a better or higher coverage
It's
product.
a gateway insurance.
Yeah. But the awareness part has come around.
Yeah.
And it has come around in such a profound manner that otherwise would not have been there. So I think that those are things that, intervention is important. Back to your question, how else could we do it, right? Of course, 59% higher financial literacy and capability index. This is as opposed to 56.5% in 2015. Of course, I shared earlier, I attended this forum as a panelist in the financial education
Network. Yeah.
We were surprised by data and statistics that the most advanced economies do not necessarily have a very high financial literacy rate. Right, and we're talking about countries like in the US, in Australia, and Australia probably has a good number of financial literacy data. But there are advanced economies where, that are still struggling.
A lot of work to be done.
Yeah. So these are simple things like, do you understand what compound interest is?
And it's shocking. I did see the statistics on that. A lot of people do not understand what it is, much less what's the implication of compounding interest. Yeah.
Exactly.
Yeah.
Right. So these are simple terms, right?
Yeah.
And we walk around and think, oh, everyone understands what compound interest is. Right?
Similar thing, it mentions 67% of people don't understand time value of money.
Yeah.
It's a huge number. 67 means you are capturing a lot of educated people.
And I think because we are surrounded by finance people, we just assume that everybody probably understands it because everybody around me understands it.
And we take things for granted. And then when
It
we
happens,
ask the right questions, we then know that there are, of course, opportunity for improvement.
Yeah, for sure.
So, 79% e-payment users now, right? And 40% itself did it for the first time since the pandemic. So this is as opposed to 63% in 2014. Of course, this is convenience, right? Payment gateway is the fastest. You could reach out QR flasher, you got your Apple Pay, Alipay, whatever pay. And it's all, we can now walk out of the house confidently without cash. This is how times have changed. This is how things have changed. And of course, merchants enabling has also changed. But I don't think 5 years ago, we will be that confident to walk out of the house without cash.
Yeah.
But this is how things have changed. I can also, share that intervention sometimes is required for market discipline, right? As a financial institution that carries the strong inclusion mandate, it is also sometimes about awareness, education,
It's
and
a big
of
part
course,
of it.
Yeah.
It's a big part of it. Yeah.
And I think there are some points you brought up over there. A lot of these interventions are not necessarily digital initiatives.
Yeah.
Sometimes, yes, digital solutions are the answer. Sometimes it's not. And I think one of the initiatives that, speaking of the note on what the government has done, right? Like the ability for you to even purchase insurance using your EPF money. I think it's a very simple, very elegant way to help people be more insured, right? But of course, there's also digitally driven kind of solutions which helps as well. I think companies like Merchant Trade, they have partnerships with insurers to offer out microinsurance to migrant workers. So I guess maybe on the digital front, Sumit, do you see that for some of the less digitally literate, do you see the digital solutions playing a big role in ensuring more access to various financial products? So what are your thoughts on that?
So I very strongly believe that digital is going to be heart of financial inclusion. And very example, Jay mentioned in some statistics. So he mentioned that overall 79% people use digital payments, 42% just in pandemic. And a lot of these are people who are not financially, let's say, educated or financially literate, in other words, you say it. But that event pulled them into using digital payments. Yeah. So while financial literacy was required, they used it, they learned it to the extent that they could use it. And it was only possible because it was digital payments. Yeah. Imagine it was world of cash at that time. It's horrible to even think, how it will look like. So, and then you take any other initiative for that matter. So payments we spoke about. You talk about lending. So when we are talking digital, we are only thinking about customer, but think of bank as well. So there is self-service we are talking about. There is assisted services as well. How do you deliver services? So digital is easy access, more economical, and then delivery of services become better. Take digital banking, for example. The reach at which, it can go, that scale it can cover faster is, both economical, both for the customer as well as the bank. Obviously, in some cases, you want to go to branch because then there is relationship. You don't want to miss high touch, but with high tech, you still have the convenience. You take lending, for example. So 24-hour lending, not possible if there is no self-service or agent-driven application quick time coming straight through to your approval system with some kind of decision model which is able to approve. And it is all digital in nature to do straight through processing. You take digital identity, for example. So if you are onboarding accounts faster without eKYC, you cannot do that fast. And we are hoping that probably eKYB will also do the similar
and that's
thing.
in the works as well.
So again, digital payments, digital banking, digital identity, digital lending, anything you touch in digital financial services is being driven faster at a platform level by the digital. And rest is more like how, as banks on supply side, you accelerate. because there are impediments on the supply side too, to be fair, right? So you're talking about inclusion. So MSME, micro guy comes to take a, request for finance. Probably the conditions are like, they do not get served. So it is also because the model that is there today is not conducive to do the credit to them. But with digital, you could build it to, in such a way that you could do straight through. So it is not only digital to the customer or digital assisted banking, but also digital processes inside, and then working with fintechs to combine it together. So I believe if it was not digital, probably the time to achieve financial inclusion would be much, much more. And then I think if you see the similar push of digital banks, they have 3 year, 4 year, 2023, 2026. Last time it was 10 years. So thinking also it is to accelerate and purely by digital. That is why you see this in initiatives.
Yeah.
I think that's true. Most of the blueprints nowadays are no longer a decade. It's like 2 years, 3 years, 4 years. That's just the pace of how fast things are changing.
Yeah.
I guess in closing, let's talk about that last 4%, that pesky, stubborn 4% that we're still struggling with. What do you think it takes to cross over that 4%?
My thoughts are, it is, it like how 42% could just do or forced to do digital payment during the pandemic. So it's situational.
Well, the answer can't be another pandemic, right?
No. Definitely not. No. But because of the situation, it pushes. I mean, well, it is true that because of COVID-19, everything else gets
It accelerated.
It gets accelerated digital front. But I think this 4%, it's down to understanding their needs and understanding, who are they, right? It's important to first identify who are they, and I think then this acceleration can happen quite quickly. But if we don't understand exactly how we would understand our profile around us, the ecosystem that we live in, if we don't understand that enough, it's hard. So we need to get to this 4% and understand them before we could tailor a solution. So it can be quite puzzling, and of course it's so near and yet so far, right? So we just want to do the 100%. It's
just almost there.
It's getting to the finishing line, but that's where the challenge, and that's where it makes it exciting, I suppose.
I guess it's like that saying, right? If you have 10 hours to chop a tree, spend 9 hours sharpening it. That kind of.
There's another angle to it. So we are, your question probably came from a perspective that what can banks do? But, truth is sometimes you need intervention as well. So that 4% we're talking of digital account at the moment, or account, which they can do something digitally after this. So let's take a case of India as well. So there was huge gap, people were not using accounts. So government pushed, a initiative, they call it Jan Dhan account. So it was like, if you need any government subsidies to any initiatives, you need to have this account. And they mandated banks to open those accounts. By default, you get insurance tied to it, and with very minimal. So suddenly, in that spurt of moment, accounts were open. So that 4% probably, if assuming they have access, if macro drivers are not an issue, and if they're not still opening it, probably life is already working well for them. So so it is two-side push. While not a pandemic, but you need.
No, we don't want to.
No.
Because you need.
It's too expensive of a solution.
It's horrible and not even expensive. So
it's horrible.
So basically, it is like some intervention, but then some access to make lives better. So, but then 4% is just the account. That is just a starting point, because onboarding a customer into financial system is a start. Life starts after that when they start using digital financial services, and that is where they're part of the system. Account itself is not going to change life.
So then
it is just after
it's the starting line.
Yes, it is the starting point.
Yeah.
So I guess my key takeaway is that it's a combination of policy, it's a combination of industry, it's a combination of innovative solutions that we have to work towards.
Definitely.
Well, with that, on that positive note, I'd like to thank both you gentlemen for joining me in this fascinating
Thank you so
discussion.
much for having me.
It's been a pleasure. Thank you.